Well, we're very pleased with the Marlborough Multi-Cap Growth Fund's performance over the short, medium and long-term periods. And we're particularly delighted that this strong performance has been recognised as highly commended in the Money Observer Fund Awards earlier this year. Well, one of the aspects of our investment approach is not to base investment decisions on forecasts of economic growth trends, because we believe they're very hard to do on a consistent and reliable basis. Much better to try to find companies which can grow irrespective of the wider economic conditions. Having said that, we do focus and look at the wider economic picture, and we see a pretty positive outlook there. Of course, there are some trade tariff concerns and Brexit uncertainties, and also we're worried about the rate of interest rate rises in the US. So more than enough to keep us vigilant. But underneath all that, the economic forecasts are showing us that there's over 3.5% on a global basis, and we think that's a very supportive backdrop. Well, we're looking for companies that have a sustainable competitive advantage and that have a leadership position in niche sectors where there is limited competition, and crucially they're enjoying the benefits of long-term structural growth trends. The fund is positioned to benefit from a number of these growth themes, and a key one is technology. And we break this down into various subsectors like e-commerce, cybersecurity, cloud computing, artificial intelligence, and indeed payment processing. But beyond technology, there are various stocks within the portfolio benefiting from other growth themes like increasing regulation, emerging market growth, robotic automation, and indeed increasing spend in various parts of the healthcare sector. Well, Brexit just highlights to us how difficult it is to forecast economic events with any degree of consistency. That's exactly why we prefer to focus on companies that can grow their profits irrespective of the wider conditions in the marketplace. We like them to be masters of their own destiny. Also worth highlighting is the fact that most of the stocks within the portfolio have got a really international footprint. And in fact, only about 20% of the revenues of the portfolio companies actually come from the UK. Well, we think long-term investors should consider this fund, particularly if they're looking for an actively managed portfolio of leading UK companies that are really benefiting from long-term structural growth themes. They may also see value in the fact that we can really select stocks from various parts of the market spectrum irrespective of their size, so long that is that they fulfill the characteristics that we're looking for.